Hello, everybody, and welcome back to another installment of our Southern California housing market update. This is for December 8th, 2020. This basically covers our first complete week after Thanksgiving and Black Friday. Also, just as a reminder for everyone, for us Southern California housing, we base our statistics on Los Angeles and Orange counties, and our description is not clickbait. We actually did see one of our metrics kind of move in a funny way, and I'm kind of curious what that might mean, and we'll go over that in a little bit here. Without further ado, let's go ahead and get into things. So let me pull up our statistics here. Obviously, the first thing we have is our new listings. This is, of course, our supply side of the equation, and guess what? It rebounded the week after Thanksgiving. No really big surprise there to see this number jump back up right here. And the big reason for that, of course, is that, sellers tend to really not want to put their house on the market the week of Thanksgiving. So we see that number drop. What's interesting, though, is it did not rebound with like a big number up here, which would indicate it was making up for last week. It just kind of resumed. And what's funny is it didn't even really match 2 weeks ago. That's not a huge alarming trend. We do notice that as things happen in the wintertime, that pace of new listings does tend to go down as we head towards the end of the year. It's actually very, very strong this year. And the other interesting thing here is you'll notice this effect is in our under 1 million category, but it's almost exactly the same thing here in our $1 to $2 million category. Huge rebound, still not quite exactly where we were, about 2 or 3 weeks ago. Now, if we compare that to 2019, guess what? This is still way more listings than we had in 2019 during this week. And I think that's important to remember. I mean, this year has been a year where everything is seemingly pushed back, right? Our spring got a very slow start. Our summer really went into fall. And I feel like we're just kind of closing down our fall, even though we are actually in winter. Now, if we flip to the other side of our supply and demand equation, we get our demand, and that is our new escrows. And we did see that these bounced back, but not nearly the same level, right? And in fact, in our 1 to 2 million, they didn't really bounce back at all. And, I think this is something that really does give me a little bit of pause. I mean, I think I would have expected to see a bigger bounce back the week after. However, I do have a cautionary tale on this and not overreading into it. And I'm going to go off share it for a second because I think this is important. And we've talked about this a couple times before, but we compare our sort of new escrows and new listings week to week, right? But the reality is that I think there's a bit of a time delay. What I mean by that is this week's brand new inventory is what will fuel next week's new escrows. And the reason for that is even in a very fast moving market like this, the average is it does take several days for a property to be shown, offers to be negotiated, and ultimately something to go under contract. So if something was, say, a new listing last Friday, it would be counted in our stats, but that house probably won't go into escrow until tomorrow, maybe. So you really have to understand that there's a little bit of a timing delay on that. So it's a little bit hard to overread in. You don't want to overread into these statistics because the next week could make you look a little bit foolish if we see this new escrows number totally rebound next week. And I have a feeling that's probably what's going to happen, but I'd be very curious to see if that is in fact what ends up happening. Now, if we compare this for 2019, again, we see a pretty healthy increase. I think it's right about 10% here, bigger, maybe a little bit less than 10% of an increase between these two, 1,093 in 2019 versus 1,176. If we go on to our absorption rate, and this is our chart where we really work to reconcile supply and demand and that relationship, you'll notice last week, right, things were just off the chart. Homes were still going into escrow, but there were no new houses coming on. And that was in both of our under 1 million and our $1 to $2 million categories. This week, it has dropped way down. We're just right about 80% for our under 1 million. And frankly, we haven't seen those kind of numbers for, gosh, almost 2 months, right? But again, I wouldn't overread into this. And the reason being is that this week's new listings might really be what fuels next week's new escrows. When we had a situation like this, we actually ate into a bunch of old inventory. Because if you look here last week, not only did we absorb at the rate of any of the new incoming listings, we ate away at past inventory. And so, it's very logical to expect that our new escrows would be a little weak this week because of that huge amount that we were over. And in fact, if you chopped this off here and you put it on here, you'd end up with a very high number. So I think it's kind of important to really not overread into this, but this catches my attention, right? When I see something like this, I think, oh, that's interesting. That we definitely want to watch this and see what's going on. Is this finally that easing of the market that I feel like everyone has been holding their breath for? I'm not sure. Next week, time will tell. Now, if we go and look at our average pending list price, I'm a big fan of watching this thing over time. Yes, it went down this past week, but I mean, if we look, I think this is definitely an upward trend here. Prices have been increasing all summer long and into the fall. I also think we have this moment where I think a lot of sellers don't understand how to price their homes in a market like this. And I'm gonna go off share here and kind of maybe give a little bit of insight, especially because we've launched a couple listings lately. And one of the things that happens is I think people are creatures of habit. And in every single year that I can remember, but this one, fall was not really the time, and after Thanksgiving was not the time where you wanted to test the market with a higher price for your neighborhood. So, if you thought, hey, there's not a lot of inventory, maybe we should push, historically speaking, that would not be good advice. You wouldn't push those prices. And our statistic is based on pending sales prices. So I think what we're seeing is a lot of sellers and agents are pricing this new inventory like it's December. But the problem is we are not in a regular December market. And I also think a lot of agents and a lot of sellers are in this position of they're waiting for this other shoe to drop in terms of the market. Like they're waiting for it to ease up. And I think nobody wants to be the listing that is left without a chair when the music stops. Nobody wants to be that listing that just at the exact wrong time overpriced their entry into the market. And even though it's a great house, it just doesn't get under contract very quickly. So I think when you have sellers and agents with that sort of mindset and that behavior, you're going to see them almost perpetually be conservative in their pricing, especially this time of year, even when maybe they should be pushing those numbers a little bit higher. And what kind of supports this theory, right, is if we go with our list to close ratio. Now, remember, this data is a month old. It's based on things that closed this week, which were contracts that were negotiated a month ago. But look, we had a second week of 101%. That means across the board, on average, agents and sellers are underpricing homes by 1%. So obviously that means, for every one that was, there's some homes that were still overpriced. That also means there were homes that were way underpriced as well to get to that 101.1% average. So I think that really sort of tells the story here of what's going on and maybe why we're not seeing these pending sale prices increase quite the way the closed sale prices are increasing, and they are definitely increasing. Now, if we go back to our $1 to $2 million average pending list price, last week was not a great week for the stat, and I said it's probably going to bounce back. That's exactly what's happened. One of the things we've been thinking about for a while is really looking for another way to maybe hash some of this pending data to get a better idea of price movement in the market. And part of it is, pending data is normally great, but when you have these sellers and agents continually underpricing their listings, it doesn't always reflect sort of the reality in the marketplace. So, we're looking to really sort of make a modification on that. I think it's something I have to sit down for a couple of hours and really think about maybe a new statistic to run. And then we have to run a bunch of historical stats too, in order to kind of get that data and sort of flesh out a history of it so we have some context. Now, if we're looking for, this is the thing that I think is my second piece of information that's making me take a step back and really say, we need to watch this and see, are we seeing a fundamental change in our market? And if you look here, we haven't seen days on market hit close to 30 days. And even though this is only a couple days up, I mean, there is definitely an upward trend here, right? And we haven't seen that for months in our under $1 million category. And, I don't know whether this is just a blip because we're eating through that old inventory because there are no houses for sale. And really, sellers, there are no houses for sale. If you have been thinking of selling, if you have a house that you think might be difficult to sell, now is absolutely your time to do that, even though December is historically not a great month to put your home on the market. Is this that, or is this a potential sign that we are starting to see some cooling in our market? I'm more inclined at this point to think that it is running out of inventory and being inventory constricted, which is a term I use almost every week, I feel like. But, we're going to want to watch this because if you'll notice this interesting trend, right? If you look at this statistic in the past, anytime we've had sort of these blips where days on market went up, it was almost immediately followed by a period where it went down, kind of again indicating that sort of like caterpillar-like motion of the market, right? New listings come on, then they get eaten up. Then some more new listings come on, then they get eaten up. And I think if that's what we're seeing, we should see this drop next week. But if we don't see this drop, if we start to see 2 weeks in a row of heightened days on market, well, that might be the sign of something changing in our marketplace. And we're definitely going to want to pay attention to that. Finally, we have to go over again to our affordability. And I think when people ask me what is driving this market, there are two things that are driving the market conditions that we are in. Item number one is interest rates, because interest rates affect actual affordability. Prices are just one component of affordability. The fact is, most buyers, especially under $1 million, they will be getting loans for these houses. So these interest rates have a profound effect on affordability and on the prices consumers are actually paying every month, which is really what people make decisions on. They do not make decisions based on the number in the MLS. They make decisions based on the payment that they are writing a check for every month or setting up auto pay for in 2020. Now, the second thing that affects these is driving this market. There are not very many houses, and frankly, I've seen some really crummy houses get bid up in my opinion, in not really an appropriate way. I don't think they're good deals. I think that, they're the kind of houses where people may have regrets on those. So it's that lack of inventory that's really moving these prices forward. When you think about why people buy houses, right? People buy houses usually because something in their life has changed. They've gotten a better job. They recently got married. They're expecting children. They've adopted children. Their children have left and gone off to college. So when you understand that context, that people usually make real estate changes when things in their life change, you understand that those things, they don't let up just because there's not a lot of inventory on the market. So if somebody decides that they're expecting a baby and they'd like to buy a house before then, they may get panicked and kind of go into this panic buying mode when inventory is severely constricted like it is now. So I think that if we're monitoring, if we think about it in that context, it's pretty easy to see how this can drive prices upward. Finally, we're going to go into our affordability, and the news is good but not great. And the reason why it's good but not great is we are definitely watching that as that median price is creeping up on sales. This is what it's doing. It is resulting that while homes are still cheaper than they were 2.5 years ago, we are still cheaper. They're not quite as cheap as they were a couple months ago. And I think that's really something important to look at. If this trend continues, we may see this number go back up to that 100% mark where it's on par. Still a great time to buy a house if you're getting 2018 prices, but definitely not as good of a deal as if we are at 90% of 2018's prices. Anyhow, I want to thank everybody for watching. We got some big news. We are launching a podcast. It will be available through normal podcast source, so Spotify, Apple Podcasts, etc. But we have also been filming these in video, so they will be showing up on our YouTube channel as well. So don't forget to like, subscribe, and hit that notification bell. That way you'll know when we release new videos. We're expecting to do probably one of those every 2 weeks. They take a little bit longer. We actually try to get in some great guests. Our first one is dropping tomorrow. It will show up on our YouTube channel first, and it might show up probably on Thursday on the other podcast networks. We talk with a lender that we've worked with for 10 years. We talk about fair housing. We talk about where interest rates are going next year. And we talk about whether or not this looks like 2006, 2007, 2008. So definitely not something you're going to want to miss. Also, we have our first time homebuyer podcast, or our first time homebuyer videos, which will be up on Friday, as well as our market stats, but just for first time homebuyers. Anyhow, thanks so much for watching. We love questions, comments. We'd love to hear from you. We will see you soon.